The data looks weak, the headlines aren't great. People start calling for a weaker dollar, then the dollar rises anyway. Again, if you've ever looked at the news and thought, that makes no sense, you're not missing information. You're missing how the market actually thinks. Most traders still believe one simple rule. Bad news equals a weaker currency. Good news equals a stronger one. That sounds logical. But Forex isn't comparing today's headline. It's comparing every economy against every other economy. And that's why the dollar can rise, even when the news isn't particularly positive. First, Forex is relative, not absolute. This is the biggest mindset shift. The dollar doesn't have to be strong. It just has to look stronger than the alternatives. Imagine two economies slowing. One slows by 2%, the other slows by 5%. Neither is doing well, but money still has to go somewhere. It often flows toward the stronger option. Not the perfect one, the relatively stronger one. That's why traders who only read U.S. headlines often miss the bigger picture. Second, money follows confidence. Currencies don't just reflect economic data. They reflect where global investors want to park capital. When uncertainty rises, large investors usually prioritize stability, liquidity, and deep financial markets. That demand alone can support a currency, even when the headlines seem mixed. The market isn't rewarding perfection. It's rewarding confidence. Third, expectations change faster than headlines. Here's what catches traders off guard. By the time a story becomes front-page news, the market has often been adjusting for weeks. That's why the reaction feels backwards. You're reacting to the headline. The market is reacting to what's likely to happen next. And those are rarely the same thing. Here's what most traders don't know yet. The biggest mistake isn't misunderstanding the news. It's assuming the news is the reason price moved. Sometimes it's only the excuse. The real driver is changing expectations. Capital flows, relative strength, that's what Forex is pricing. So next time the dollar rises after what looks like bad news, don't ask, why is the market wrong? Ask, compared to what? Because Forex isn't choosing the best economy. It's constantly choosing between alternatives. And once you start thinking that way, the market stops looking random. If this changed how you look at the dollar, comment relative strength and subscribe to MarketsVox if you want to understand what traders don't know yet about how Forex really works.